Similar. Last time we stopped with, I think we were on question 1B. That's where we ended last in the last video, I think. Okay, this was the last thing we did in the last video. Now I'm going to get to question 1C, which has to do with VAT. I need to emphasize a couple of things first before I can start with this. You need to remember when you're dealing with the VAT section, the only thing that you care about is VAT and nothing else. So no matter what you do, just remember that for this question, you are just calculating VAT. And then after calculating VAT, you need to ask yourself the VAT amount that you have. Is it VAT input or VAT output? And that's it. And that's how you get to answer this question. Now it says here that VAT is calculated at 15%. The following transactions were taken from the accounting records of Patel Power for the year ended 28th February 2023. And on the 1st of February 2023, SAL's VAT account had a credit balance of 34,500. The fact that it's a credit balance, it means that 34,500 is VAT output. It is a liability. It is VAT output. I will repeat that. That 34,500 is actually VAT output. And you need to remember that VAT input reduces VAT output. All right? VAT input reduces VAT output. That's what you need to remember. And when calculating your VAT, you need to ask yourself, the figure that is given to you, is it inclusive of VAT or is it exclusive of VAT? Okay. For instance, let's just read the first one. It says that purchase goods marked means that is the selling price. The selling price of these goods is 8,800. And then they specified it's VAT exclusive. What if they didn't mention that it's VAT exclusive? If they did not mention that it's VAT exclusive, it means that selling price will be VAT inclusive, okay? Now, it's before a 7.5% trade discount was allowed. Note that when goods are purchased, we normally recognize VAT input. However, when we purchase those goods, we can record VAT input at that amount, which is 8,800. We have to reduce that amount by 7.5. So VAT input will be recorded at or will be calculated at 8,800 less the trade discount. It's always what you paid for that product or what it was invoiced to you for that specific product, which is the cost price in essence, all right? I don't want to use the word paid. VAT input will be calculated on the cost price. And here the cost price for us will be that 8,800. We minus the 7.5%. Now, whatever we get there, we're going to multiply it by 15 over 100. Why am I dividing by 100? It's because they told you that that 8,000, whatever the cost price is, it'll be exclusive of VAT. That's why we're dividing it by 100. Got it? Good. So when you calculate VAT on that, you will simply take that 8,800 times 100 minus 7.5%, and then you times it by 15 over 100. That will give you 1,221. Please note that on this whole cost price, you need to recognize VAT input. On purchases, we have VAT input. VAT input reduces your VAT output. Right? Let us move on. The second one, what does it say? It says that a debtor paid 54,625 after a 5% settlement discount was allowed. Note that when we sold these goods to the debtor, and I need to go back to this because you need to understand for IEB purposes, VAT is calculated on the invoice basis, all right? Invoice basis. And it's specified that it's on invoice basis. So when we sold these goods to a debtor, we recognize VAT output when we sold them to the debtor. When the debtor pays us, we don't recognize any VAT on the payment that the debtor makes because on those goods, already we have calculated VAT input. Obviously, unless the business uses the payment basis or the cash basis. But for now, please note that for IEB purposes, they hardly ask the payment basis. They always ask the invoice basis. Now, note that that 54,625, it is after the 5% settlement discount was calculated. But therefore, we need to, as I said, on that 54,625, we don't need to recognize VAT on it. However, guys, this will affect VAT when it comes to the discount allowed. Because now the discount allowed, remember, we're supposed to take that 54,625 has VAT input. And that VAT input, we need to pay it over. We have already paid it over to SARS. Okay. But there's a problem when we did not receive the VAT amount that we expected to receive from a debtor. So it means that what we paid to SARS, that VAT output we paid to SARS, it was more than what we actually got from a debtor because we allowed the debtor a settlement discount of 5%. So that VAT output that we have already paid to SARS when we sold these goods to a customer, we already paid that VAT output. We need to reduce it, so we need to claim it. So we have to calculate the discount, and VAT on that discount will be VAT input. How do we get the discount here? Because the 54,625 is already at 95%, you will multiply that by 5 and divide it by 95. And whatever amount you get will be VAT inclusive. To get VAT from that amount, you will multiply it by 15 and divide it by 115. Okay? Now, once you have calculated the VAT amount, you can decide that VAT amount is VAT input or VAT output. In this specific example, that 375 will be VAT input. Discount allowed is an expense. VAT on the expense will be VAT input. Got it? Let's move on to the next one. The next one says that a debtor whose account of 6,095 had been written off as bad debt returned to pay us the full amount. Note that when we sell goods to a debtor, we record VAT input. And when a debtor is written off, that VAT input we initially recorded, we need to cancel it, we record VAT input. So the net effect is 0. But now later on, when the debtor comes back and pays us, that will be bad debts recovered. It means that the money that we get, that 6,095, includes the VAT, and that VAT amount does not belong to us, it belongs to SARS. So VAT on that 6,095 will be VAT output. But firstly, you will have to take that 6,095 times it by 15 divided by 115 because it's VAT inclusive. And then the amount that you get, you will record it as VAT output, which increases that 34,500. 8 marks, just like that. All right. I've already started with this. Check the video on this. I posted it yesterday. Just check a video on that. It's the same name, which is company financial statements. Check it out. I think I already started. If I'm not mistaken, I was doing it with the grade 11s, my grade 11s. I think we did up to adjustment number 6.2, if I'm not mistaken. Check it out. And then the next video that I post on this will just be from 6.2. If you want to try it on your own, you can just take a look at it and try it on your own, okay? All right, you can try that on your own. Thank you for watching. Please don't forget to subscribe and let your friends know about the channel. Kgotsong.